Yes, yes. Good morning, my fellow simpletons and degenerates. It is I once again, the Savage of Wall Street. Just making sure we have a nice little look at our little bear over there and that things are looking good. Sitting on a nice little hitting pad at the moment, trying to make myself a little more comfortable. And then just seeing if you guys can hear me. In fact, because I'm trying a new microphone and I'm hoping that I sound okay. So let's see if you guys are in the house. Let's see how I sound at this moment. So hopefully, I think I can hear myself at this point. So that's good. And I think that the this microphone probably sounds better than the other one. I kind of looked at the replay a bit on this past video I made yesterday on the live, and I just wanted to make sure that I sounded good because it sounded like a little boomy at times. And so, at this point, I guess I'm trying to make sure that you guys can hear me well and that, it doesn't sound too boomy. So it sounds louder, which is good. That's always a great thing. And I like it. I'm going through another microphone. It's a new little microphone that I'm trying out, and hopefully you guys like it. So good morning, my fellow simpletons and degenerates. I hope you guys are doing great. I hope you guys are having a good morning. I haven't been a busy bee this morning, and so I've been in and out of positions. um I'm taking a lot of money off the table. I'm raising a lot of cash, and it's just it's one of those days where I'm buying back some covered calls. It's looking good for me. I mean, Webull had earnings, and they pretty much crushed it. At this point, there's a little profit taking going on, so um, nothing that was not expected. I mean, I was expecting it to fly to like closer to $18 a share, but you know, it's okay. I think it's just the overall market today is red, right? So we have to take that into account. A lot of profit taking going on. It is option expiry day. A lot of people are getting margin called. Um, a lot of numbers are not looking as expected for a lot of folks, and so they gotta pay the piper, man. That's what happens when you go on margin, and this is exactly why I tell you guys, I don't like going on margin. Um, I don't like you guys going on margin, and I think that a cash only account is kind of the best way. Not that I would be a hypocrite if I said I don't use margin. I do, but it's usually to get me like out of situations where sometimes I don't have enough capital, and it's just to buy back cash secure puts. So essentially, I'm getting all my money back, right? My collateral, which is cash, and or covered calls, and then I buy covered calls, and then I'll go out and sell covered calls on a lower strike, further out to bring in even more cash. And so then I get myself out of a bad position or a position that I don't want to be in, which is be on margin. The Nasdaq is down 1.1%, 240 points. The Russell 2000 are down 66 basis points. The Dow 30 down almost 0.5%. S&P 500 down almost a point. So we're the VIX is up almost to 1550. There's a little I don't want to say a nothing burger, because obviously things are happening where they're showing us that we do have a weaker stance when it comes to the market. Earnings are letting us know that guidance is going to be a little weaker than usual, and so you got to take all that into account, right? I mean, cash secure puts is where it's at, guys. I told you guys, you guys want to be sitting on a pile of cash, man. There's a lot of companies that are too expensive. They just you can't justify their price. Unities, I think they're a little too expensive. I think Salesforce is a little too expensive. Roblox is too expensive. Palantir is definitely too expensive. I think Google is a little expensive. Amazon's a little expensive. Microsoft, Tesla's definitely expensive. Microsoft, you can make a case, but it's just you just can't justify these prices, man. Now there's other companies that are not as expensive. I think that there's room for them to grow, right? And those are the ones that I'm going heavy on right now. But for the time being, let's we'll deal with the market and see what it's giving us, and then we'll deal with all the multipliers later. I mean, at this point, this option expiry day, we're just taking money off the table and we're raising cash. Who do we got in the house? Moneymaker Juan is in the house saying hello. Jay Gill is in the house saying good morning, Savage. Yeah, sounds louder, says Moneymaker Juan. All right, good. Ken's mom is saying Savage. Ken's mom is in the house once again. Thank you, Ken's mom, for watching. She's like the number one fan, I think. I think that's awesome. Kilua Dre's in the house saying morning, Unc. Always be right. How old are you, Kilua Dre? Because you call me uncle, and I'm like in my low 40s. So I don't know, man. Like I when I hear the word uncle, I picture someone like Uncle Bruce. But then again, I am an uncle. Like I have, my nephews are like 8 and 7, and I have some nephews that are actually in their 20s because my cousins had kids like at 16, which is insane. But anyways, I'm just curious. Because if you're young, that's great. I mean, if you're in your 20s and then you're now starting to invest and look after your future, and you're doing options, I think that's awesome. You're gonna be a multimillionaire, kid, and so I'm happy to hear that. I really want the younger crowd to start watching me so that if I can get a few kids that are in their 20s to start thinking about their future, and instead of thinking about going out to the club and spending all this money in alcohol and maybe drugs and just in expensive, ridiculously expensive cars, getting themselves into debt, trying to finance a Mercedes-Benz or BMW, and then they're gonna crap away 10 years of their life trying to pay that off, and it's horrible. I'm supposed to just starting to invest in your 20s and getting yourself set up for the future. I think is the greatest thing ever. Always be writings in the house saying good morning. JJ's in the house saying hi yo. I'm not golfing. It's a Tonight Show reference. Right. I know exactly what it is. Just put in an order for 5 Weeble cash secure puts for January 26th, $15 strike. Kilua Dre, that's how you do it. Those are looking wonderful. I think I have 1750s and 15s. So let me double check here. Man, I was busy this morning. I'll tell you guys. I'm really looking at Marvell. I don't know if you guys have been looking at the at Marvell Technology. The ticker is MRVL. They had earnings and they're down like 16% today, which is great because this is cash secure put zone, right? Marvell is a really good company. I was looking at them in the 50s, but I think I took a position on Enphase. And I had to, sometimes you have to make a decision, right? You look at two stocks that are kind of the same price point, and then I think SMCI as well. And I put my money on SMCI and then Enphase. And obviously SMCI paid off, Enphase not much. Although my Enphase cash secure puts are out to like 2026 right now. And I got a big chunk of money. So it was a big premium. So anyways, Marvell Technologies ran up, obviously, right? And so it was like at $80 at a point. And I was like, damn, I missed the boat on that one. Coulda, shoulda, woulda, right? You're always hindsight is always 2020. So, anyways, MRVL right now is down 16% and really good company. You can do October 17th cash secure puts. The premiums are not going to be that juicy just because there's not too much shorting action there. It's a really good company. However, a $65 put expiring October 17th for 430, 450. Not insane. Not insane. Even if you were to get these shares put at 65 and it was at 60, you'd still, I mean, this is a 10-year hold, a 5-10-year hold. Really good company. I like it. I'm obviously not trying to give you, financial advice. It's information, and it's for it's basically educational purposes only. And if you were to look at some technology companies, this would be a good one to look at. And it's a really, really, really good company. They did show a little. I mean, they have good numbers, but the guidance for quarter three is weak, right? So that tells. I mean, every single company, just like Unity, and just like C3.ai, just like uh, um, let's see, um, NVDA. Every single company that's coming out with their earnings in the last quarter are telling you, barring a few, right? There's some poster childs that are really great companies. They're making a killing, but most of the sector in technology is showing weaker guidance, and this is what's happening. In we've been, I've been beating the drums, telling you guys, companies are going to show weaker guidance. I'm kind of bearish, right? And so, I mean, he's right there. He came out to play. He's letting you guys know. We are showing weakness in the market, right? I mean, companies are telling you that. Walmart is telling you that. Target is telling you that. I mean, these are companies, that deal in retail, of course. But if retail, right, which is like the one benchmark we have to show, how people are spending, that it's telling you people, I mean, discretionary spending is low. People are thinking about vacationing and doing staycations instead of spending more money traveling, because the pocket saying no, right? You guys got to take that into consideration, which is why whenever there's a company that shows weak guidance and it's a really, really good company and it gets hit 20%, 15-20%, that's when you go in a cash secure put, with a cash secure put, and you go out one strike zone down from where it is to protect yourself to the downside, and then go out a couple of months out to bring in more premium because the IV is higher, right? So yeah, so anyways, Marvell company, Marvell Technology, really good company. I told you guys yesterday when SOFI was at 26.10, 26.20, I was like, cover calls is the way to go right now with SOFI. I know. So look, I know SOFI's a good company. I know they're bringing in $3 billion of revenue. I know it's a great company. I have several thousands of shares in SOFI, and I'm telling you right now, it's not that the company is just bad. It's just that it's going to show a little weakness because the overall market is down, and so people are going to sell some SOFI so that they can adjust prices elsewhere, right? Some people are going to, they bought SOFI at $8-10, and they are, down massively on some portfolio, and then there's, they want to get out of margin, and so they have to raise cash. What do? And this is not just people in general. I mean, this is also, big ETF funds, right? Big investment firms. They have to raise, $3-4 billion really quickly and add some liquidity. They're like, we're gonna sell, 5-10 million shares of SoFi, and they'll dump them through the day, right? So that's what happens, So $30 cover calls were handing out almost $3, I think, yesterday for January strike, right? Let's see, what are they at today? Those are 245. So listen, if you would have sold at 310 yesterday, right? You could have bought back this morning. Right now, you could buy back for 245, right? And you would have made 55 cents, 65 cents, right? So that's $65. You multiply that, say, by 10, that's $650 in one day. So that's what I mean by, cover calls. you let the stock pay you so that it can belong in your portfolio, right? I tell you guys this all the time. Um, I think of stock as tenants. I think of my portfolio as a building, and I'm the manager of that building, right? And stock has to pay rent, and so I have to charge rent, and that's the rent it pays, right? And sometimes I get out of a position in a day. Sometimes I get out in a few weeks, but at the end of the day, I get paid, And sometimes you're gonna end up, going underwater, and it happens, and it's fine. All you have to do is this: you got to do the genie. You got to do the genie, and you have to cross your arms and let the stock market do what it does, which is wither premium away. Like cash is time is money, right? So let time pay you. Have patience. Warren Buffett says this all the time. He's like, the stock market is a device where you take, um, money from the impatient to the impatient person. So, I mean, from the impatient person to the patient person. That's what happens. And so this is all it is. Anyhow, uh, if you would have sold cover calls yesterday, today you'd be making a little money. And then we have a long weekend. You could have let them ride and burn off some more data, right? And so more cash for you. So anyways, that's what happens in the markets, my friends. Don't ever be afraid to take money off the table. Don't ever be afraid to of the upside. I was telling you guys yesterday, don't be afraid of the upside. So just put in an order for 5 Webull cash secure puts for January 26th at 15. That's right. That's what I was going to look at. Sorry, man. Let's see here. I gotta find my. So Webull is down 5% today. Okay, awesome. So right now, October 17th, I really like. You know why, guys? Because it's obviously it's 2 months away, right? But it's going to expire right before the next earnings. That's when the IV gets high again, right? And so these will burn off for the most part, and then that premium burns really quickly, and then once you get out of these, then you can go out a month and get a lot of premium because the IV is going to be that much higher because there's going to be earnings. So I don't know if I'd ever explained that, but that's kind of the reasoning behind it, right? So just get paid. $15 cash secure puts for October are paying you $3 right now. $2.95 to $3. There's absolutely nothing wrong with those $15 cash secure puts. You're essentially buying the stock at 12. It's sitting at $13.90. January's 15s for $4 right now. Not terrible, dude. You could put in a stinker at $4. That's where everybody is. So you go to $3.95. Go a nickel below that if you want. Or you could leave it at 4. You could go to 405 if you want. I think you may get triggered. But $3.95, it's not terrible. It's the high of the day. Up to this point, getting some almost $4. You're essentially buying the shares at 11. For a couple of months, say 4 months, right? You're getting paid $1 a share per month. That's my benchmark. That's what I love to get paid. I love to get paid $1 per share when I write a cover call on the most part for every month. Obviously there's variations, right? And I look at different things, but that's like very sexy to me. If you're going to go out 3-4 months and you get $1 per share, almost, that's very sexy. I mean, I don't see anything wrong with that right there. It's easy money. You're getting over 20% right off the bat, 25%. I love it. I like it. That is a great right. Kilua, that's a great right, my friend. Yeah, that's awesome. I like it. Not bad at all, dude. I think that's good. You can't go wrong with going to 15 15s for October either, So, but no, going out to January, it's a cash grab for sure. Love it. Absolutely love it, my friend. Nothing wrong with that at all. All right, let's see here. What else do we got? Ricardo Canales is in the house saying Savage. Wing Commanders in the house. Tobin, what's going on, brother? Greetings from California, my friend. I know you're all the way in Europe. JJ's in the house saying close my Weeble caps before NVIDIA reported anxiety was high. It's all good, man. Cash you closed them. That's good. That's fine. I mean, dude, there's nothing wrong with that. I mean, as long as you took money off the table, it's fine. I mean, I know why you did it, because you were not sure about earnings, but this is why you go out in time and then you take big chunks, so you protect yourself to the downside. But like right now, you're doing cash secure puts. If you're doing cash secure puts on Webull right now, like I said, those 15s expiring January, paying you $4. Those are money, man. It's a cash grab. Double D saying, good morning, bought back cover calls on SOFI, sold cash you can push today on SOFI. Double D, I think that's fine. That's fine, dude. Jay Gill saying, I'm doing a call spreads on Palantir and Microsoft. That's fine. Kilua Dre, I'm an uncle too. It's a sign of pure respect. It's all good, dude. I totally understand. I know you're it's all good, my man. It's all good. Mando number 5 saying, hi y'all. Dude saying, let's go. Put writing time. Cash secure put indeed. Marvell put credit spreads. That's up to you, my friend. Mr. Clean, not Genie. Mr. Clean. Well, the Genie. Remember when and I'm talking about the Disney one, right? With Robin Williams. Remember when the Genie comes, the Genie of the Lamp. That's what I think of. Ricardo now saying Webull to January 16, $15 strikes for $390. $395 is sexier. He's saying Ricardo 3 cash secure puts filled. Good for you. That's easy money, my man. Easy money. That's the man just made $1,200, $1,170 right now. Like you just made $1,170. If you don't trade at all for the rest of the year, you're good. That's golden. Wing Commander saying I went gambling and bought 2 October Marvel calls, $70 strikes and 80, $300 US total. When are they expiring? Oh, you say October. My bad. Kind of close. Will it recover? I think it can recover. I don't know if I would have gone out in time, maybe 2026. But I mean, dude, if it's cash secure put money or cover call money and it's premium money and that's probably how you do it, I see nothing wrong with that at all, man. So anyways, guys, I wanted to touch base with you guys because I've been a busy bee today. Cash secure puts on C3.ai 1750s to 2026, not bad at all. RX, man. I actually did some $5 cash secure puts expiring in January, and I brought in a chunk of change. And so that's what I'm. It's easy money. It's a cash grab. I got I think 125 for them. Let's see here. GME was down. I believe like 22.50 or something, or 22.40, and some $23 cash secure puts out to January. Not terrible. Not great. Not great premium, but SMCI cash secure put time. I know that the premiums are not the greatest, just because that I don't know why, but it's drying out that premium. It's down like 5% today, so I would write cash secure puts on it, but the premium's not the greatest. I think you could probably use your money elsewhere, unless you really are looking at SMCI to get, put some shares, in which case I think that's great. Seno One had earnings, guys, and they crushed it. I was telling you guys to buy this stock when it was like 15 something. And I was saying cash secure puts, $15 cash secure puts, guys. I mean, this 16s are not bad, 17s are not terrible. They crushed earnings and then they went up to like $19 a share. I rolled some $18 covered calls that I had over to 20 for January, and I brought in like 55 cents of premium per, which is great. So now I'm sitting in, pretty, because there's some profit taking going on. So those are going to be worth less. I'm going to leave them alone and then just see what happens. Up to this point, I'm already up 15% on those rolls. I love it. I mean, it's just money making money. At this point, I did nothing. All I did was just use my stock as collateral. I said, roll it. And that's it. It paid me. TeraWolf is down today, almost 3%. I see nothing wrong with going to October 17th and selling some $9 cash secure puts, asking for $1, $101 to basically buy like at $7.99, 888. I mean, it's nothing wrong with that. It's a good company. They have NVIDIA contracts. I think it's a cash grab. But if you do put those shares, it would not be the most terrible thing in the world. You can start a position at 8. Open Technologies, it was up to like almost $5 a share today, and it's just a sell-off. I think I told you guys about $4 cash secure puts expiring October and trying to get $1 for those. So some stinkers at 125 would not be terrible. Or you can wait, see what Monday brings. At this point, I'm waiting for it to go to like $3, and I think it will go to $3 before long. And then at that point, I'm going to do like some $2 cash secure puts out to like, October, and try to get paid like 75 to $1 for those. So yeah, it will be cool. It's just a cash grab at this point. It's just the shorts have gotten caught. The shorts got caught. They were trying to run the fucking stock to the ground, and they, what happened with GME, it's happened with so many companies, and they get caught. And now people are like buying it. So then they have to cover. And every week they have to cover. And every week they're going to have to cover. And then the basement is higher every time, right? So at this point, I'm sitting on $5 covered calls that I sold out to like January, and I'm just laughing. I'm laughing. And so my average is like in 80 cents. So like I'm just laughing because I'm just seeing what's happening, and unless we go to like $3, I'm gonna do some more cash secure puts. I keep selling covered calls, rolling them, buying them back, covered calls, rolling them, selling. It's just a money maker at this point, and I just think it's hilarious what happened here. Smart Rent is down today, 144. You thought that you missed the train. You think you missed the train on Open Door? Open Door is going to $8 to $10, but Smart Rent, I actually added some more shares today, and I bought at market price. I didn't even do cash secure puts. So I had so much profit that I took from premium. So at this point, I actually went shopping. I bought some ICCM this morning at market. I bought some Smart Rent. I bought some PROP. I bought some IOVA. I bought some RXRX. I bought some BBBA, and that's all at market price. And let's see here. I bought some RXRX, I said, right? I bought some AI at market price. And so, I mean, I have cash secure puts as well on it, but I don't think those are going to get filled because I just don't think they're going to get filled. But again, it's low enough to where like I'm okay buying at market price. If anything, I'm averaging up, but I want the shares. It's such a low float. And the shorts are going to get caught. They're going to get caught, and I'm just waiting for it to do its thing. Worst case scenario, I have more shares. Not a problem whatsoever. I'm waiting for Ethereum to go under $4,000 to buy one. Today I got. Let's see, what else did I get this morning? I got some NVTS. This morning, it was down like 4%. I got it like a 585. So I bought some NVTS. I do have $6 cash secure puts expiring in October, but I don't think it's going to stay there. Again, it's just a cash grab. You know what's funny? Remember, you guys, I got put those shares yesterday on some cash secure puts stinkers that I wrote on ASST. Uh, I read on that company. I just keep reading, and they're basically trying to become a Bitcoin holder, right? And it's just they're based out of Texas. They're listen, little risky, right? But I just took that premium from those cash secure puts, and I did more cash secure puts, and I just did one at a time, um, and then I put some stinkers of 320 today. I have some 340s, but I put some 320s, and they got filled, and so then I did some um I did some more 320s, and they filled, and I did they wouldn't get filled. I did 310s, and they filled. So like I'm sitting on like 20 contracts. So and I've been doing one at a time, right? And my average is like 310 at this point on ASST. And I it's hilarious, but you know, it is a risky play. I get it, but I've done stupider things, and it's just the premiums are insane, and so anyways, it's a little gambling going on, but just reading up on the company, I think, just the sheer fact that they donate to the Republican Party, they're based out of Texas, and I just don't think that merger is going to get nagged. I think the merger is going to go through. I think they're going to be a Bitcoin holder, and it's going to be free cash at this point. Worst case scenario, it doesn't go through, the stock tanks, and it goes to like $3, right? My average is 310 at this point, and so I'm basically buying the stock at 190, and so I'll just sell it, and then I'll make more. I'll make more money because I'm covered up to like 190. It's so stupid, but I was just reading up on it, man, and I'm just like, I just it's very interesting, and usually I'm not that stupid, but I guess I am. So just the sheer fact that they're a marketing and content delivery service, right? And they deal with TikTok and Discord, and I'm always on Discord. I'm always on TikTok, and I make a case to tell people, if you're going to invest in a company, make sure it's a company you often use, right? And I'm always on those. And so my daughter's always on TikTok, and my wife's always on TikTok, and I'm always on Discord. So I don't know. I think it's quite a gamble, but it's a fun one. CKT saying morning all, going to keep an eye on Affirm. Affirm, I'm reading. It's insane. It's insane. I don't know why SOFI is making so much more money than Affirm. More people shifting to buy now and pay later methods could be an indicator of worsening economy. No, that's agreed. You buy now, pay later, and there's always an interest that you pay with that. Of course, I told you guys, I think in the past, people are actually using loans to pay for groceries. That's insane. They're actually taking out loans so they can have liquidity, so they can pay for groceries. That's crazy, but that's where we are. Wing Commander saying, got to run, family weekend. We'll catch and rerun later. I got you. As soon as my wife gets off work today, we're actually going to hit the road ourselves, and we're going to go to Tahoe. Need some relaxation. I'm going to bring my little heating pad with me, and I'm looking to like not do anything. I'm going to sit and just by the pool, hang out. I got to stay off my back, so that's what we're going to do. I think the pool is actually going to be. I heard that actually swimming is good when you have a lower back injury, because you're not putting as much stress on it. So that's kind of cool. CKT saying, look at what Affirm was back in 2020, 2021. I know. I was looking at them. I was looking at SOFI at the same time, but SOFI is just so much more upside than Affirm, dude. And it's way undervalued. SOFI should be $50, $60 a share. I'm gonna tell you that right now, just based on their holdings, everything else going on. SOFI should be at least $40 a share. Same with GME. GME should be at least $40 a share. Give Savage a thumbs up, says Wing Commander. JJ's in the house saying thumbs up. Lee Sasa, how does smart differ from open, the business model? Well, smart rent is a service that you use, and it's just basically to it's to secure your house, right? And open technologies is actually they buy houses like a lower price. They they kind of fix them up and then they sell them for a profit, and they pay you cash, so they look for sellers that are motivated. They buy the home, they fix it real quick, with as little money as possible, and then they sell the house, right? That's kind of what Open Door does, and that's the difference in their business model. JJ, thumbs up. Lisa, do this saying he's just one of the Strive team executive suite. I have a good feeling about, but not much to go on the pre-merger. CK, he's not going to invest in a firm. No. Just going to keep it as an indicator. Earned wage access, fintech app loans that people are using for groceries are equivalent to hundreds of percent interest APR. I agree. Anyways, guys, hey, listen. I just wanted to come in real quick and do a quick video, let you guys know, that this is today a day for a lot of opportunity. A lot of stocks are in the red, and so it's cash secure put day, guys. Cash secure put day, and is a day where you take premium off of the table when it comes to covered calls. If you did covered calls in the past week when everything else was flying. I'm the Savage of Wall Street. Thank you for watching. I'll see you guys Monday at 8:30 a.m. You guys have a great weekend. Maybe I'll go live from a casino at 5 p.m. West Coast time Sunday. You know what? What I'm gonna do is I'm gonna be drinking. I'm gonna having a drink. I'm gonna be drinking an alcoholic drink, and I'm gonna be talking about the market. And I'm gonna be telling you guys that I'm gonna be thanking the gamblers that paid and financed that trip. My fellow simpletons and degenerates, thank you so much. You guys have a great weekend. I'll see you guys on Sunday. Bye. Hello.